Spencer for the webinar. Head of the Department Management, HKBK Degree College. Also happy to welcome Ms. Lavanya Naidu, ARIIA Coordinator for the webinar. Assistant Professor, Department of the Commerce. Now let's talk about the speaker of the event, Sakshi Narayan. Sakshi Narayan is dedicated and professional currently pursuing her doctorate from the Amity University, Noida, and also working at IIMT College of Management as an assistant professor. Also an innovation institute council as an innovative ambassador with a rich background in the academics. Sorry for the disturbance. With a rich background in the academic field, Sakshi has 6 years of teaching experience at the prestigious university institutes like St. M.R. Jaipuria College, Lucknow, and Lotus Valley International School, Noida. Her passion for education and personal growth extends to her work with the Digi Saksham, an initiative by the Siemens Group, where she embassadors the motto "Learning for the Earning." Through this platform, she actively utilizes her skills to empower others for forecasting a culture of the continuous learning and development. Sakshi's commitment to the imparting knowledge and uplifting others makes a distinguished feature in the field of education and beyond. Over to you, ma'am, Sakshi ma'am.
Thank you, Chavi. Thank you for your nice introduction. I would request if you can allow me to share my screen.
Yes, ma'am, you can share your screen.
Sorry, I don't have any right to share.
You don't have a right. Just a second. No?
Um, good afternoon, Sakshi ma'am. I am Arpita.
Good afternoon, ma'am.
Sakshi, please rejoin. Uh, Sakshi ma'am, hello. Good eve- Hi, Sakshi ma'am. Please rejoin Sakshi ma'am because technical issue. So please rejoin.
Yeah, I'm trying to reconnect it. I'm sorry for the disturbance.
Yeah,
I
please
would
share your
request
screen.
I would request if you can make me a co-host because I'm unable to share my screen.
Yeah, Sakshi ma'am, please rejoin ma'am.
Ma'am, I'm unable to share my screen because host has not able given me permission. Chavi, are you there?
Yes, so I am there. I'm working on it. But give me a Just 2 seconds. Let me.
Done, ma'am. Please share your screen.
Yeah. Thank you. Thank you so much.
No. He's done. Please share your screen, ma'am.
Yes, ma'am. Your screen is visible now.
Yeah, just a minute, please.
ಏನಿದ್ರು ಸೋಕ್ ಮಾಡಿನೇ ತಗೋಬೇಕು. ತಗೊಂಡ್ಬಿಟ್ರೆ ಆಮೇಲೆ ನೀರ್ ಕುಡಿದ್ರೆ ಅದು ಸ್ಟಮಕ್ ಅಲ್ಲಿ ಹೋಗಿ
Yeah, I hope I'm visible now. My screen is visible.
Yes, ma'am. You are visible and your screen is also visible.
Yes, ma'am.
Good afternoon, everyone. Myself, Sakshi Narayan, and I am an assistant professor of IMT College of Management. I am also an innovation investor at IIC Cell. So here, as a representative of IMT College of Management, I would like to have a session on angel investment and venture capital funding opportunities for early stage entrepreneurs. As we all know, India is a growing and a developing country nowadays. It is having so many startups, so many entrepreneurs are coming each and every day. So funding is a crucial, or we can say a critical milestones for each and every stage of the entrepreneurs, aiming with the transformation of innovative ideas in the valuable business. So along with this, I would like to tell you first, who are the entrepreneurs actually? So the entrepreneurs, as we all know, that they are the individuals who has their own business with their own innovative ideas and the products which they are creating by their own, but they do not do a copyright or they do not copies from other ideas or the products. But we can also say that they are not a born entrepreneurs. They are the entrepreneurs which are made or who made themselves eligible for the society, as they see around whatever the changes are taking place, whatever the new things, new upcomings are there in the market, accordingly they adopt themselves and they become an entrepreneur and give some innovative things to the society. As if anyone want to know that who are the successful entrepreneurs, then what I had observed, that I'm sharing that the successful entrepreneurs literally work hard for their targets. They know what is the market, how the market is going on, what the society needs, and they work accordingly. They take their own risk and new opportunities. They don't think that what others are going to say. What if I am going to fail in this thought or in this startup? They take a risk, continue learning. They have a continuous learning aspect, that whatever it's coming in my road or on my way, I'm going to learn and understand, and then again I'm going to stand up on my feet. They have considered failure as an opportunity. So entrepreneurs are the dedicated persons who start a new company, a new venture for the society and give us innovative things. If we see what are the types of entrepreneurs are, so let me tell you in the easy way that the builders are the persons who are traditional business persons, or the entrepreneurs, like who are having their restaurant, shops, carpentry shop, hairdresser, mechanics, companies like this. They are the builders, we can say. They are the traditional business entrepreneurs which are coming from generation to generation, and they used to carry forward it. Who are the specialists? They have a great potential business, typically like working on the software development, working on the applications of the smartphones, tabs. They have a concept of marketing development, medical equipments, business intelligence. Even the digitalization has taken place only because of their support and their help, that whatever the changes is taking in society, they are into it and they are giving a new way to us. Who all are the opportunists? we can say the project oriented business typically who are well educated entrepreneurs, and they are there to translate or design the concepts into a physical form, whatever we are getting in our bookish language, like in management or in any of the courses, and transforming them from the bookish language to the physical form or the 3D form. They are the opportunists, the actual entrepreneurs who give a world or a way to see the worlds or see the concepts of others in an innovative way. Who all are the innovators? Now, the lifestyle entrepreneurs does not have any education on the basic starting, but they have a aroma of business. They know how to run the business. That idea of the services which the entrepreneur is going to have or going to pursue, those are the innovator investment entrepreneurs. They know whatever we are learning, whatever its tradition is going on, whatever the digitalization is going on, if we mix them, if we form a new thing, account from them or apart from that, those are the innovator entrepreneurs, and they are giving a new way to the startups too. So basically, if I'm talking about the angel investor, as I told you about the funding procedures for the entrepreneurs in the startup, the first one is angel investors, who are the wealthy persons who invest in their own money in the companies, usually the startups. And it is in the early stage of the development. Like if I take an example of a plant, how plant grows with the help of seed. If I sow a seed in a soil, and then I'm putting up water, giving a proper sunlight and the ventilation, all those things are working according to the angel investor. That is the angel investor who is working. He is putting a small amount of water, proper sunlight, proper ventilation. That is the role of angel investor. Even they expect to take ownership position in the companies because they support and they give a capital in unsecured way. They know that they don't know that company is going to survive for a longer run, for a short run, but they provide a support. So that's why they take a position of the ownership in the companies also. And the second one is the venture capitalist or the venture capital. What they used to do, they are a private equity investor, we can say, who provides capital to the companies with the high growth potential in exchange of equity stake. Now, if I'm taking the example of again a seed which we sowed earlier in the soil, now it started blooming up, now it become a plant. Now the plant needs some support, some balance to grow up in a tree. So that balance time, when the time of support is coming, then the venture capitalist is the person or the main you can support for the companies to grow up and to survive in the society. Venture capital investment typically involve funding startup ventures or small companies that wish to expand but does not have access to the equity market. So venture capitalists typically look in the companies with a strong management. If the company has a strong management, there are large potential of the market. They know where are the variations or the diversions in the market, how the market is going to change. They can forecast for their upcoming success or failures. For that, venture capitalists actually give them a support. Yeah. So now if I see that the venture capitalist and the angel investors both are providing us fund, then what is the difference between them? The first is the source of fund. Venture angel investors are giving up personal wealth and networks. They're providing by their own funds. But in venture capitalists, there is a pool of money for the limited partners. There are few partners, they are coming together and providing a limited source of money, that how the company can survive more. And accordingly, they want to earn or invest in their capital of the company or the startup. Next is investment size. Angel investors generally invest in a smaller amount. They have a small investment cycle or the size. But the venture capitalists invest in the larger investment size. Stage, as we know, angel investor, they are earning or investing in the early stage or the seeding funding stage. But the venture capitalists, they are funding or they are providing the low investment in the later stage. Level of involvement, angel investor provide hands-off involvement. They used to give them tips, tricks, and the experience they had gone through it. They shared with the startups so that they can grow. In case of venture capitalists, they active involved but less than angel investors because the involvement is mainly for the matter of the revenue which is generated by the companies and how much they can pay get back from the company. Decision making process. Often individual decision making investment committee make decisions, and in angel investors they make a decision but they rely on the startups or the person who is the owner of the company. In the venture capitalists they try to make their own decisions and it should be followed by the company. Industry focus. In angel investor, diverse range of industries are there, but in venture capitalists they focus on the specific industry, specific sector. That if the company is going in the sector in which the venture capitalist or the pool want to go, they will invest their money or their capital in that company only or that startup. Risk appetite. In angel investor, there is a higher tolerance for the risk, but for the venture capitalist, moderate to high appetite is there because the company can either survive or can lose in the market. Return expectation, typically seeking high returns in the angel investor case, but in the venture capitalist, they know it is 50-50, so they have a balanced return expectation from the startups. Now, if we see why funding is required, we are talking about that the startup needs fund, angel investors and venture capitalists are there to give fund, provide the funds, but why the funding is actually required in the company? There are few things which the company should focus or the investor needs to focus on. Prototype creation, what kind of prototype is there, what they are going to do, what product they are making, is it a 3D product or the 2D or the normal product which is not came in the market, how the team is going to be hired. They are having any hierarchy for the team hiring, or anyone can be in the company anytime they can exit or they can enter in the company. What is the working capital, how much they had just spent it from their own in the market and how much support they need from the owner, like the investors, like angel investor or the venture capitalist. What are the rules and regulations? What are the legalities the company is following? Are they going according to the rules and laws which are created by the government? Raw materials and equipments. If the company is having some getting some raw materials and some equipments from the open market, from where they are getting, is this authentic? Are they getting in the larger amount, the higher amount, which should not be done, or they are securing some amount? Licenses and certification. Is the company licensed? They're having a government startup India trademark or some licensed things has been done according to their own from their own side. Marketing and sales. What are the marketing structure they are following? How much the sales is there of their products if the new innovative products has been done or has been came up with their support, their innovation. Office space. What is the office space they are having? How much are they going online or offline or the hybrid mode? And how much expenses they are going to, how much money they are going to expense or the expenditure can be calculated based on their structure of the company. Now, if we talk about the stages of venture capitalist financing, so they are basically divided in the 5 stages. That first one is the seed stage. As I told, if a seed is sowed in the soil, what are things are required? They need in the seed stage when the company is often a little more than an idea of the product or the services that has a potential to develop into a successful business down the road. Same way, when a seed is sown in the soil, then the actual amount of or the exact amount of ventilation or the water or the soil is required to grow. Second stage is the startup stage. Now, the company is here with the idea, with the product that how they are going to come in the market, what is the innovative idea, what kind of innovative product they are going to launch, and they are going to enter in the market. In this stage, company has typically completed the research and development part of the business plan. And now they are ready to begin their advertising and marketing products, the services, and potential customer. Typically, the company has a prototype to show investor, but has not sold any product till now. The third stage is first stage of the startup or the venture capitalist financing. That is, we also call as emerging stage. In this first stage, financing typically coincide with the company's market launch. Funds from different phases like venture capitalist and angel investor, both are interested to invest in this company. Now the next stage comes is the expansion stage, also commonly referred to the second or the third stage. The expansion stage is when the company is seeing potential growth and needs additional funding to keep up with the demands. Because the business is likely already has commercially viable products and is starting to see in the market, so the expansion has been started accordingly. Now, if we talk about the company has entered in the market, now it's about it's surviving. Now it's the time to bridge the gap or complete the gap. That is the final stage of the venture capital financing, in which the company has reached maturity. Funding obtained here is typically used to support activities like mergers, acquisitions, and IPOs. A bridge stage is essentially are transitions of the company being full-fledged viable business. At this time, many investors choose to sell their shares and also want to end up the relation with the company, as they had already provided funds which are based on the company's requirement. At this time, we can say that the venture capitalist or the angel investor try to exit from the company and to try to earn their revenues, whatever has been investment done from their end. So till now, we had talked about the initial stages of the financing, what are the about the how we are going to begin a startup. The main focus is how we are going to build up a company, how we are going to establish a company, and how we are coming up with the ideas, and then we are going in a market to run it. Clear financial goals, whatever the goals are there in the mind, define the specific and the measurable financial goals aligned with your startups. How much you want to invest in initial stage? What is your motto to investment? What are your products, for which company, for which product, for which prototype you are going to invest? You have to first describe the financial goals for them. Secondly, implement robust budgeting. That means develop a detailed budget that is considered all operational expenses, revenue projections, and contingency plans. We need not to just mark out, okay, this much amount will be invested in marketing, this much will be invested in advertising, and this much will be sales, this is much for the production. We need to get it in a detail that if you're investing a slot of amount or an amount in a production, then from where I'm going to get the raw materials, from where I'm going to charge for the machines and the equipments. So all this detailed information should be, or budgeting should be done. Next, the cash flow management. Prioritizing the cash flow management to ensure a healthy financial position. Negotiate favorable payment terms with the suppliers and engage timely customer payments. Everything should be marked and managed timely. Risk assessment and mitigations. It means identify the potential financial risk and develop strategies to mitigate them. Diversify revenue stream to reduce the dependency of a single source. If you are dependent on a single source of income, they might hamper or they might create a blockage for the company to survive. Scenario planning, that means conduct a scenario analysis and prepare a various economic situation. What situation can come in the market for which the company has to keep a halt or company has to go away from the market. Currently, we can see the scenario like COVID. When the COVID came, what happens? Most of the companies has to halt or they has to stop their production, and their production, as they stop the production, their market was going down. But few survived in the market because they have alternative options of surviving. They know the scenario if the situation or the economic condition is going to change, how to survive in the market. Investment strategies. It evaluate the investment opportunities carefully. That means consider both short-term and long-term goals and the sustainability. Align investment decision with the overall strategic objectives of this startup. Do not think that only one kind of investment will be good enough for the company to run up, for the company to get the backup as a revenue or for the needs. If I talk about the right investor, then how we are going to choose that who will be the right investor to invest in the company, then we need to keep a focus on it. A research work should be done to know what are the investors, who all are there going to invest in my company, and what are the main motive behind this. Firstly, we should know about the vision of the investor, that ensure their strategies, goals, and overall vision of the company, and how the investor want to have an interest in, then why they're most interested in your company, in your startup to invest in. A clear understanding should be there between both the companies and the investors both. Also, after that, we need to know about the financial alignment. That means we need to understand the potential investors' financial goals. If the venture capital or the private equity firms understand the fund structure, that how we are going to run the fund within the company, are we just going directly to the market, or we are going from the production, the research, and then we are entering the market? The investors should be well aware of those. Who all are limited to the partners, and what are the investment timeline? Are they going to exit in between the market or between the company when the company is about to get on the expansion stage, or they are going to be there with till the end stage or the bridge stage with the company? The value beyond financial consideration, how the investor is going to help you. There are abundance of capital in the industry today, but the shortage of good opportunities is not there. Or in other words, we can say the seller's market. What the seller market want, how we should sell the products, how we should enter in the products, that can be told or that can be shared with us with the experience. And that values that experience, if the investor is having in the company, then definitely they are going to be a fruitful for these startups. Final thoughts. Selecting the right investor is weighty decision that will have long-term implications on the growth of your business. As an entrepreneur, your time is limited and likely being consumed by other more urgent matters. However, before you expect the first term sheet or you decide to do everything on paper, just give a thought that are you willing to do, or are you going to have an investor which is going to have vision as you want, that he's going to follow the same financial alignment as you expected, he's having the value and the interest and sharing the experience and giving some time to your thoughts? Then only give a final thought and go for the paperwork and then further for the startup. Just discussing the few things like the terms and conditions of the investment for startups. The investment should be in line with overall financial goals. One should have a clear understanding of the risk involved. Make sure that you have a diversified investment portfolio. Understand the valuation of the startup, have a clear exit strategy, get everything in writing, consult with the financial advisors. So these are the few tips which are the terms and conditions that investment should have for these startups. Now, do you think actually the investors are interested in your startup? Are they not looking that they should start their own company as an entrepreneur? Yes, they can. But what are the things or what are the points which make the investor to get interest in your startup? Firstly, is the objective and the problem solving. What is the objective of your company? Why you're going to start the company? And what are the tricks or tips or tricks or what are the criteria you are going to solve the problems? So if the points are unique, if the solving tricks are unique, the objective of your startup is unique, then the investors have interest in your company. Management and team, how you are going to manage your company? Is that management think that, okay, we should give a same authority to each and everyone, or you are having a hierarchy management? Your team spirit is there or not? Are you going to focus on each and everything? Everyone has been divided the task according to their ability, and then they are focusing on it. Market landscape, what is the market requirements and how the company is going to come up with? Are they had this seen that what the market earlier it was in the specific area where the startup is going to start? What's the current market scenario? What forecast is saying? Either they are in favor or they are in against. Customers and supplies. What are the requirements of the customers? Customer want the products as a raw material or for their uses or for the use, and how they are going to supply to the customers. All those things are most important to be taken care of. Competitive analysis. Do you have any competitor in the market? If not, then you are having a monopoly in the market and you can survive. If the company is having a competitor in market, then they need to think what better and how better I can make my product or sell the product or supply the product to the customer and to the users. Sales and marketing strategies, how you are going to strategize your selling, your marketing skills, how the financial statement is going to maintain, and at the end, what are the exit revenues? At the end of the startup or at the end of the company's final product is being sold, how you are going to generate the revenue, how much revenue you expect, the investment or the capital which you had invested in the market, more than that, or it's going below the amount which you had invested in the market. So these are the few things on which basis the investor is actually interested to invest in startups. If we look over it, there is a Startup India Fund support, which is having a few schemes like SIDBI Funds of Funds scheme, Startup India Seed Fund scheme, Startup India Investor Connect credit guarantee scheme for startups. These are the few schemes which is being started or established by the government of India, which is giving them a support that yes, you can invest in the company with the help of these. Here is the startup link also. The company link has been given. It's a government aided scheme. So you can visit the website and you can go through the details of this scheme. Now, can anyone tell me how many startups are there in India till now? Please unmute yourself and let me know how many startups are there in India till now.
More than 2 lakhs.
Okay, sir. Anyone? Okay, let me tell you, as a registered startups, currently there are 1,59,157 startups which are registered under the government. And the how many incubator or business incubators are there? Those are providing the funds or the guidance to the startups. There are registered 231 incubators are there, which are providing the informations, guiding the startups, entrepreneurs to come up with the business, with their innovative ideas. If we talk about the funds, government is providing initially 20 lakhs of rupees to each startup just to get their ideas in the market, start the entrepreneurs, start their new venture, new capital, and then enter in the market for the society, for the benefit of the society, for the benefit of the country. And these all informations you can get from the Department for the Promotion of Industry and Internal Trades. So this is what I want each and everyone to know about how the angel investors and the venture capitalists are coming up with the funds to help the entrepreneurs to start their own venture or own business. Thank you from my side. If anyone has any question, they are open for it.
Hello, madam. I'm Judy Garg. There are two things. One is a startup and another is a stand-up. Startup is for a general category for all, and stand-up is for scheduled caste and scheduled tribes. Can you highlight some of the points of these two separately?
Sir, currently I won't have the much information about the stand-up as you told about the tribes, because my work, my most research is on these startups India. So I'm basically working on it. But yeah, I will let you know with the personal links. So you can drop me a message. I will contact you and I will let you know for the details.
Is there any office created in districts for the startups?
Yes, sir. There are the offices for the that startups. They can go to the Department of Promotion and Investor and India startups. Online also they can approach to the India startup so that they can get connected to the entrepreneurs or the business incubators so that they can help you out. Even IIC, the institutions, innovations councils also is there to help the institutions or help the startup or the entrepreneurs to come up with the ideas and start their own business or ventures.
Another is if a startup is not working well, can be it is be winded up.
Pardon, please.
If the startup is not working well, can it be winded up and money is recovered?
So the company or the incubators or the investors firstly try to give us full support if the startup can goes on, because if they are looking of the startup is started only with the innovative ideas or the new things in the market. Yeah, if they are not working, they try to wind up the companies, and accordingly whatever the revenue is being generated, it is divided according to the agreements which is signed by the angel investor or the venture capitalist at initial stage.
Where the loss will go, will it go to the investors or the startup owner?
So basically it goes to the investors of the startups because they are investing a huge amount in the company or the startups. So they are taking most of the shares is gone in their hand. Remaining comes to the owner who is establishing the startup.
And what about the government fund, 20 lakhs given by the government for the startup? It will
So
have
accordingly,
effect on.
so in the agreement, they accordingly give the shares that how much the investor is going to have, how much government is going to take a share, and what remaining amount is being taken by the owner of the company or the startup.
Okay, thank you, madam. Thank you.
Thank you, sir. Any more questions?
Hello, ma'am.
Yes, ma'am.
Yes, I wanted to have a little bit more clarity about the venture capital.
Yeah. So, I told you, I had given the example of that seed, that when we sow the seed in the soil, it's now growing up like a plant, and the plant is about to become a tree, but it needs a support. Same way, when a company is started with the initial investment by the angel investor, and now the company is like it is about to expand. They are getting in the market, they are having a good hold in the market, but they want to expand in diversified field. So angel investor cannot give that much investment. At this time, they need a pool of investors where the venture capitalists play a role. They act like a support beam for the company, and they provide the investment amount according to the diversification. if a company is in an apparel background, they want to go in the medication also, they want to go in footwear also, they want to go in some other areas. For that, the venture capitalists give them investment amount. Is it clear?
Yes, ma'am. Thank you.
Okay. Anyone else?
Does anyone have any doubts? I think so, ma'am. No one has a doubts. Everything is clear.
Okay.
Okay. On the behalf of the organizing committee, I would like to sincerely thank Sakshi Narayan, our outstanding speaker today. We had a chance to hear a fascinating and thought-provoking conversation about the angel, excuse me, angel investments and the venture capital, funding opportunities for the early stage entrepreneurs today. Through her remarkable ability to convey information, Sakshi Narayan left us with insightful discoveries and the motivational concepts. Her engaging lectures us and motivated us to study more. We appreciate the effort and the time they put into organizing this educational program. The key takes away during the session was I have learned what is the difference between the venture capital and the angel investors, and how to attract the investors for our startups, and what are why we should raise our fund, what are the things make we should keep in our mind while raising our funds and all. Thank you, ma'am, for this session and how to start our startup company and how to attract the investors so that they can invest in our company.
Thank
So,
you.
thank you, ma'am. The engaging participant of the today is E.R. Ganyasham Das. Thank you for the who is more interactive during the session. He has asked the questions like what are the different uh, venture, what are the how to start and startup company. If suppose if this startup company does not work, what are the different guidelines that we have to do, or else we have to shut down the company. And thank you for the interaction, E.R. Ghansham Das.
Thank you, madam. Thank you.
Finally, to add a beauty and the memorable to our session, I encourage everyone to turn on their cameras and shoot cheese so that we can take a quick picture as a remember. Remember, please turn on your cameras. I request everyone please turn on their cameras.
Allah.
Also, also request you to fill the feedback form dropped in the chat box within 5 to 6 hours from now. Thank you once more for the participating in today's webinar. You can reach us by the phone or the email if you have any more questions. We are pleased to offer you further assistance. In chat, post links to our YouTube channels and the other social media accounts. Don't forget to join us on the next webinar, which is on the topic personal branding. Why you need to show up for yourself on Jan 22, 2025 at 6:30 p.m. I, Chavi Jain, your host for the today, signing off on a cheerful note. Have a wonderful day. Thank you.
Thank you, ma'am.
Thank you for all your time and all for making this moment a wonderful moment. And thank you, Sakshi ma'am, for this webinar.
Lakshmi, are you there?